Greetings, members, one and all of the Salivation Nation. This is some interesting information about silver's supply and demand. And it looks like the supply is easing back, but just a bit. This comes to us from goldsilver.com, which is a dealer for sure. And there's a lot of opinion in this piece, but I've got to give them credit for doing some research. And I do believe the raw data that they've compiled together is worthy enough for mention, but it's always good to kind of keep things in perspective. This was shared with me by Chuck and Plata, and let's explore a little bit about this shortening of supply to a degree, and really we're going to kind of make some sense of it, balance it out a bit, and see how it may have an effect or not on the price of silver. So this comes to us from Jeff Clark, who is a senior analyst at goldsilver.com. Says that the data is in. It's based off of a review of reports from multiple consultancies. The silver market has officially entered the supply-demand imbalance. The structure now in place sets up a scenario where a genuine crunch could occur. The silver price has been stuck in a trading range for 5 years now, but behind the scenes, an imbalance has been forming that could potentially lead to price spikes based solely on the inability of supply to meet demand. That statement is not based on some far-out projection or end-of-world scenario. It comes solely from the latest supply and demand data. As you'll see, it demonstrates just how precarious the state of the silver market is, and as a result, how easily the price could ignite. Here's a pictorial that summarizes the current state of supply and demand for the silver market, and we'll see what conclusion we all draw. Because I do kind of disagree with this about how the price will just ignite, because I think it's not taking into account the already above ground silver stocks that are out there. But let's take a look at the data and see. He's saying it's fallen and can't get up. An annual supply is in a major decline. And I disagree with that term here, and you'll see by the chart why it's not in a major decline. And the downtrend is getting worse. So let's see how the amount of new metals coming to market has rolled over and continues to fall. Now, I do believe that he has compiled this data honestly, and which kind of contradicts what he's saying here in the statement that it's that about demand dropping dramatically. Because if we go back to just 2014 and 13, or even 11, the supply that came out of mines, it's not much lower than those times, and a lot of people buying back then. There's plenty of it to go around. Yes, we can see that in 2015 and 2014. Those were the highest. And this could indicate peak production. We don't know. There's a lot of different factors at play. I just posted a video very recently about a mine being temporarily shut down, suspending operations in Mexico. That's a pretty big producer of silver. Well, there's lots of different reasons why mines may shut down. And it may not be because of accessibility. It could be because of other reasons, environmental and the like. But you can see here that it's obvious that the supply is down here. Now, we're not through 2009 yet. I don't know what the P stands for in this little thing here, but maybe that's a projection. Maybe they're projecting it to be just a little bit less than those years. But you think about it, 900 million ounces, even if it went down to 800 million ounces, well, that's still a lot of silver out there per year, notwithstanding all the silver that's been mined. And look here, 1965 was a special, amount where they mined a lot of silver that year, and it dramatically went down from there. But even 1970 was far above 1960, and even more above 1955. So the new supply for silver has now dropped for 4 consecutive years, but not dramatically. That's the key. That's the key here. And it's widely projected to fall this year as well. And wildly projected is the key here. This is a projection of where they think it could be. And though it's showing a little bit less, it could be more than last year. We'll see. Supply didn't even fall during the nuclear 90s, the period when miners couldn't turn a profit due to stagnant silver prices. But it is now. Here we can see here, there in the 90s, started to pick up in the late 90s here. So why is supply falling? It starts with miners, and they're now digging up less and less metal each year. Mine production from the top 10 largest silver producing countries. And you can see here that it has peaked off here 2016, 17, 18, and 19 projected. Basically, this is another graph which includes all these different countries together, and by color as to their production here. And very interesting indeed. So every single country, the top 10 producers, is mining less silver. There could be several reasons behind it, and they don't go into it. And it could be because maybe there is a little less demand, or the demand, even if there's more total demand, the demand for certain types of silver being used is less, and they have enough to use for those countries, for those applications rather. The trend will worsen because of the low silver prices. Many miners can't operate at a profit. Most are waiting until silver prices see a sustained price rise before committing more capital to increase production. A quick price spike won't be enough, though. Then they'll need time, in many cases years, to bring new supply to the market. In other words, new supply won't suddenly increase when silver prices move higher. And it says it's actually worse than this. Silver mine capacity, the amount of production expected to come online from new mines, has fallen off a cliff. It's down almost 90% since 2013. This is a result of the low silver price. It tells us how much new metal will be dug up this year. Less. Well, and that's just it. I don't know that you can make that conclusion because silver is mined as a byproduct of other metals, mostly. And as I posted in a previous video, most of the actual silver, dedicated silver mines are producing less, for sure. But I don't know if they're measuring or that it will stop the capacity from other metals, which they're down as well. The other commodities like nickel, copper, and the like. And so we'll see how it plays out, but I think there's more to it than what the author is saying here. And to keep in mind that it is mined as a byproduct of other metals. And the other thing to keep in mind here, as we analyze this posting here, is that the actual cost to mine an ounce of silver, no one really can peg it down on an average of all the mines put together. But they say that it averages anywhere between $4 to $12 an ounce for all-in sustaining costs. That's a huge gap. I've not seen anything that's really a number that we could really take home to the bank, so to speak, that really tells us what the all-in sustaining cost is and what it would need for them to make a profit. How much per their, let's say on average it's $8 an ounce. Well, in order for them to make a profit and for it to be sustainable, would they mean, would it need to be higher than that? Would it need to be $13, $15 an ounce? I don't know. What does all-in sustaining cost mean? Does that include paying the shareholders and the salaries of everybody involved, or is that just the cost of actual production? I'm sure salaries are probably included for the miners themselves, but what about the executives, the owner of the business? How is profit calculated? What does it take to be profitable? I don't know. It's just a question to ask. The problem is not just mine supply. Silver scrap is at 20-year lows. Now, this I do believe. A lot of people have been turning in scrap, especially you can see here, leading up to the supply that's come in. And from a lot of the silverware, old, silver pieces and pieces that people have been using. Silver for different factors, jewelry and the like. Scrap is coming in and it's down 30% from 2005. That is something else. You can see that the supply from scrap sources is now at a 20-year low, down nearly 30% just from 2006. Low prices are to blame. Scrap dealers can't make much money at current prices. So it's not that it's not out there, it's just that it's not being turned in. But I do believe that a lot of it probably has been turned in and turned into rehypothecated, really, in the form of bullion and other applications. So when demand increases, where will the new metal come from? Not from government stockpiles. The global government silver inventories are less than 5% annual supply. Look at this chart. Now, this is eye-opening, I think, for a myriad of reasons. And I think that, to hold silver at the price it was, especially in the 90s, they saw that it was pretty stable and stagnant, and throughout the mid-2000s. So it's probably more expensive for governments to stockpile silver. The governments don't stockpile silver anymore, so no nation uses it as their currency, so they stop hoarding it. Once the next spike in demand comes, users are on their own. The government has no backup plan, and really, understandably so, because like I said, it's expensive to store for the amount of space it takes up based off of the spot price that it provides. It's not really economically viable to hold it. And so the demand. While supply is falling and locked in a downward spiral, demand continues to make records. I don't know about that. Let's see what they say about it. Something mainstream doesn't seem to be aware of. Here's a picture of total silver demand around the world. Silver fabrication demand charging higher. Now, you look at that for the projection of 2019 and 2018, which is the last hard number, that's just over 900 million ounces. Now, let's go back up here for a moment and check out the supply. 2018, just over 9 million ounces. So it's relatively close. It's very close there. And ideally, you'd want the supply and demand to run right about the same. And so they're probably analyzing, doing some market analysis, and that may be one reason why they're not producing as much silver. And again, does that take into account, the byproduct of other mines? I'm sure it does, but it's interesting to see. Yes, demand has picked up here, but when you look at the supply that's already out there and it being turned back in, especially bullion bars and the like, and other factors, how does that play out? But demand does seem to be rising, at least according to this chart. But you can see here that the demand is, even then projections show it not going at the same rate. There was a pretty big jump from 2015 to 2016 there. That's probably the biggest leap. Total fabrication demand for silver has risen 6 consecutive years and is widely expected to rise a 7th year. Much of this demand comes from the ever-growing industrial uses of silver, valuable chemical properties. That's true, and see how that plays out. So silver industrial demand near record highs, and we can saw that demand really picked up in the mid-2000s here, and then went off during the recession. Well, if you have another recession, that demand's going to fall too, because this, you can see here, the demand really came off there toward 2011, and 9 and 10 kind of, or 10 and 12 there, sort of on the opposite ends there. But you think about it, the reason, even with demand falling from that point, why did the prices go up? Well, I posted a video about that as well too. Why did the prices go up in 2011? The demand fell. It's very interesting, but it's an anomaly. It's an anomaly why it went up that high, because you would think if demand was really growing, even in industry, we would think it'd be growing there. But that's because of the recession. I'll see how it plays out. Industrial demand is near all-time record highs and headed higher this year. You probably read articles about weak demand for physical metal. That's true. There you go. I'm glad he's honest about this, because there really hasn't been as much demand because the prices are low. But the rest of the world hasn't let go of their investment in silver, which means the ETF, the paper markets. And we can see here at record highs despite flat price. And look there. That's basically silver derivatives you're looking at there. Very interesting. Demand for all silver exchange traded products hit an all-time high last year. You and I don't buy these products, but the mainstream does, and they obviously see no need to lighten up their positions. Demand for silver is bursting everywhere. Look at solar use, and that's true. And this is something that will really never be tested, because these people that buy the ETFs, the silver ETFs, they're not going to cash it out for silver. They're going to cash it out for cash. Silver demand for solar panels at record highs. This doesn't surprise me. In fact, I would probably venture to guess that this projection is probably pretty conservative as well. It'll probably be a little bit more than this. Silver demand for use of solar panels has risen 6 consecutive years and is expected to be higher again this year. It was 0 12 years ago. And you have to think about it too. There's about 20 grams of silver for each solar panel. But let's say it goes down to 15 or even 10 in the coming years. That's silver that's not going to be, quote, recovered or recycled unless those panels go bad. They're going to stay up there for the life of the panels. That's really probably the only unrecoverable silver that you can make an argument for. The rest of it can be recycled with electronics that are literally replaced every 2-3 years. That silver can and will be recycled, especially if the prices go up. Keep in mind that the amount of silver going green technologies is growing exponentially. If you want to go green, you are by default going silver. This is a trend that is picking up steam internationally and will be in place for the foreseeable future. I've also posted a video about that. Meanwhile, silver demand in China continues to set records. So the fabrication demand in China is at record highs. And this projection number, I don't know that I agree with, because China's economy is struggling now. And as of the recording of this video, new tariffs have been enacted. And we are in a trade war. And they are going to probably hit us with a lot of tariffs too. And that's going to hurt both economies. And we could see this silver fabrication demand weaken this year and next. It's been relatively stable, but relatively high for the last 3 years here, or 2 years. Fabrication demand in China, that's grown 425% in 18 years, and this is with inflation rate lower than the U.S. Jewelry and silverware demand both hit all-time highs in 2018. That's interesting. Wow. And then he gets into the silver price. He says supply and demand in the market are going in different directions. He can't find a period in modern history where supply and demand were so out of balance than now. I don't know. To me, they're looking at the data that Jeff provided here. I'm not seeing it. They seem to be more perfectly aligned than anything. They're closer to each other than they have been in the past, which is what you want. And it could change for the worst to not make silver go up, but keep silver stagnant, even if the economy goes south because demand goes south. That's the way it should be. But, I think that in the long run, silver is going to do what it's supposed to do, and that is preserve our wealth and preserve its value based off the price of the dollar. But he says, with the setup currently in place, the wick that leads to silver's rise sits precariously on a roaring fire. Once the next bull market gets underway, the rise in demand will overwhelm the built-in decline in supply. Well, the thing is, in order for the silver bull market to get underway, that means they need to have a bull market in the economy as well. And we're kind of already in that, and that bull could get tired soon. And if it gets tired, the bear is going to take a couple scratches at silver, just as it does the rest of the economy. It's Economics 101. Spiking demand meets inadequate supply. Once the silver party gets going, it will be one for the record books. And I do agree with that to a point. But that's just it. Economics is not just 101. Economics is a 401 and a 501 course when you think about all the different factors that come into play. But I do like his style, and I like that he shows data. He's done his research on it, for sure. And there's some factors to certainly consider. I just draw different conclusions than he does. But I'm not completely out of step with what he's thinking here. But I wanted to try to balance this out for the viewers out here because really, it does not mean we shouldn't be buying silver. We should. It's a way to preserve your wealth. But I don't think we should. I don't think it's healthy. I don't think it's good for the reputation of silver to overpromise performance, because, as is always the case, past performance does not necessarily predict future predictions. So there you have it. Very interesting indeed. Post your thoughts below on this story and the data that is enshrined therein. Would like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.